Yo, what's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took and how you could have capitalized on the market today. So again, I've been saying this like for the last 2 weeks. The market has been trending bearish. And how do we know that? How do we know what the trend is and what to focus on? Well, this chart right here, you could literally just tell by looking at it what the trend is. We're on puts here, 590 puts. You can see 10 was above the 50 this entire last 2 weeks. And that's how, we get our bias. We look at this 30-minute chart on the Friday contracts, and if one of them's crossed, which means the 10's above the 50 with the 50 curling up, that means we're trending in that direction. So the last 2 weeks the market has been getting absolutely destroyed, and we're able to stay on the right side because of how the system is designed. When the market moves a lot, I always say this, we are able to catch it. Just how the system is designed, and that's why it's so good, because it reads the market like a book. And you can see we were crossed the last 2 weeks. We had a little bit of a break below the 50 here, went negative, not entirely negative, but we did go negative right here. But this ended up recrossing just because of the higher time frames. When you look here, hourly's crossed, 10's above the 50, 50's curling up hard. We have these massive higher time frame support areas where the 50 SMA is, and you can see how well respected all these time frames were. And even with this 4-hour chart, the 4-hour ended up crossing this week. That's why we did see some continued downside. 4-hour is a massive time frame, and we got to cross in that time frame, which leads to a big move. Higher the time frame, the bigger the move. It's pretty simple. So going into this week, the market's been bearish the entire week. There were some opportunities to go long. We hit overbought on the put side, I think like 2 or 3 times, and those did give some relief bounces. And then, last 2 days, I think I did take 2 long trades, and they were able to work out for some points just because of, the circumstances of the market, and, able to play some longs. But main focus is on the short. So going into today, that was the focus. I mean, we look on the 0-day chart here, off of open, 5-minute time frame. You can see right here off of open, I'm trying to zoom in here without messing the chart up. The 10 went above the 50 here right at open. All right. It's hard to see on this chart, but when the 10 crosses 50 on this 10 o'clock open, the 50 was like curling up pretty much. It was flat, so I went short, and I got out of this pretty quick. So as soon as this candle ended up dropping a little bit, the 50 ended up pointing back down, and that's where I got out. I think it was like a 30-point loss, if that. As soon as that 50 turned down, I was out, because we want that 50 to be curling up, to be in the trade. So once I saw that give the 50 point down, got out of the trade. And yeah, I mean, there was really no other entry here. That's one of the things with the system. You gotta know when to hop out and when to take a short or take an entry, because just because okay, we're in a trending market, you buy the 50 dip, okay, not when the 50 is like pointing down like this. So as soon as that 50 went down, I got out of my short and then just waited. What was I waiting for? I was waiting for a 0 DT cross on these puts again. Why? Because the market's trending on the 30-minute. The most ideal trade when we're trending on the put side is a 0 DT cross on puts. That's like the most probable setup there is with the system, is a 0 DT cross in the direction of the 30-minute trend, and 30-minute trend bearish, so we're looking for this put cross again, and you can see what happened. We got the cross again, and look at the move we got. I mean, it's very simple. 10 went above the 50. Honestly, you could have entered this right at this 11:45 candle. Your actual entry would have been this 11:55 or 11:50 candle, but this 11:45 candle, you could have honestly jumped the gun a little bit, just because the 50's already curling up, the 10 was sloped up. I mean, you could have jumped the gun on this because we know we're bearish, and you could have gotten entry there if you want to be a little safer. Could have entered here at 11:50, but you can see what happened. We got this cross, 10's going above the 50, and you could just trail this 10 SMA. We got this massive move down. This probably gave, I don't even know how many points, probably close to like 200 plus if you held this entire move all the way up in here. It was just a textbook move. This 10 SMA is your trailing stop pretty much. It's a good way to have a stop loss on your runners when we get across and trend, because a lot of the times this 10 SMA holds a majority of the time, and we could, you could catch a very large move when, you just use this 10 SMA as your trailing stop. So, even when we are trending, you could average up on this. I feel like this 10 SMA right here, it's a great spot. You could add your position, because if it closes below, okay, you could just close your runners at that point, because there's a good chance that it does hold and continue lower. And then this was a beautiful setup. So again, 30-minute trend is bearish. When we have trend in the market, you're able to buy this 50 SMA here. This 50 SMA blue line, you're able to buy these dips in a trending market. So we dipped down this 50 here. I went short, and we were able to catch a massive move. I think this went like 150 points, 160 points, maybe 170 points, something like that. I trimmed at the 10 SMA and held the rest, on this move down, and then trim majority once we got this big candle closure above the 10, and it was a pretty historic setup, won't lie. I mean, we finally got a very good 50 dip. Recently I feel like the 50 dips haven't been giving the best opportunities, but we finally got a really good 50 dip right here, and the trend has been super strong. So this 50 held, and we got a big move out of it, and we got this 50 dip later in the day, but I mean, I wouldn't even be taking that at that point. The system already gave so many points, no point to continue trading after that, in my opinion. If you wanted to, sure, but I mean, definitely not an ideal trade at late in the day after we already bounced out the 51s. Sure, maybe you could give it a go, but I'm not taking that trade any day of the week. So yeah, I mean, very good day. That's what we did. That's how you could have capitalized on the moves. Going into tomorrow, this is what we look like. Obviously, the trend has been the same for last 2 weeks. We're still crossed on the 30-minute, so you already know what that means. We're gonna be focusing on the short side. 0 DT cross on puts, 50 dip on puts. I will be watching for overbought on the 0-day puts, because if we do continue lower, we're gonna hit probably overbought tomorrow. So to get the levels, I went over this a million times. I hate repeating this because it's annoying, but to get the levels, this is what you do. You go to the 0-day chart. All right, go to the 0-day chart, and you go to the 30-minute. This is the only time you go above the 30-minute. All right, and then you go find where the 50 SMA is. You can see on the right side of my chart, it tells me where it's at, 235. All right, so let's just say this is tomorrow. To get the overbought levels, you add 3.5 to this, so that's about like 5.85. So 5.85 would be your first level, which is all the way up here, and then you add 4.5 to that, and then that would be your second level, and that's your overbought zone. And you add 3.5, add 4.5 when this 50 SMA is above 1.00. If it's less than 1.00, you multiply it by 4 and multiply by 5 to get the level. So that's how you get the levels. It's pretty simple. Some people get confused on how to do that, but that's exactly how you do it. When we get to that point, that's usually when we expect some sort of relief balance. If that happens, if we do reach overbought tomorrow, I'm probably going to swing some calls, just because, I mean, this trend has been going on forever. And, usually when we hit overbought, the trend doesn't really hold from there. But, I mean, March is historically quite a bearish month. So, with the 30-minute trending so hard, I mean, the 30-minute 50 has been holding pretty much the entire last 2 weeks on every dip to it. So we know what to expect when we have that trend, and we know what to focus on the 0-day chart. That's the beauty of the system, man. There's no other system like that. I've seen so many gurus on Twitter just get absolutely destroyed the last 2 weeks because they don't have a system like the system. I mean, the system tells us when to buy dips, short rips, and things like that, and all the rips have been pretty much getting sold off. Why? Because this 30-minute chart has been trending bearish for the last 2 weeks, and people are just trying to blindly buy the dip on individual tickers when everything's cross bearish. It's like, you don't need a bottom tick everything to do well. If you trade these charts with the system, you'll be able to catch all the big moves, because that's just how it's designed. Puts cross, we're gonna get a big move down. Calls cross, we get a big move up. Things like that. So it's very simple. That's pretty much all I got. If you guys enjoyed, drop a sub. If you guys want to follow along with the trades I take, me and Colton, we run a Discord, and that's where we share the trades for the day, things like that. So ton of value in there. If you join up, if you want to learn, I'm out. Peace.